Morning, Kate.
Good morning, Carl. So Sweetgreen CEO John Newman saying last night, quote, "I think it's pretty obvious that the consumer is not in a great place overall, but I think it's much more complicated than that." Taking a look at the big picture here, lower income consumers pulling away from quick service chains. McDonald's CEO noting a bifurcated consumer with lower income traffic across the sector down double digits. A similar pullback taking shape this quarter at Wingstop. CNBC viewed a memo from McDonald's U.S. president to operators post earnings that said, quote, "While we remained a positive comp guest count, overall guest counts continued to decline, underscoring the need for disciplined pricing, value, and affordability," adding, "Now is the time to keep our foot on the gas with regard to value." Value also key for the younger consumer, pulling back from long-standing favorites, Chipotle and Cava this quarter. Chipotle CEO telling us that step down in the younger consumer was, quote, "sizable," and Cava's CFO telling me that the 24 to 35-year-old wants to be sure that they're receiving, quote, "tremendous value." Starbucks and Dutch Bros, though, bucking the trend. Starbucks said it was building momentum in its back to Starbucks plans, with its U.S. comps flat in the quarter but turning positive in September, and that continuing into October. More than half, remember, of their customer base, Gen Z and millennials. And then finally, Dutch Bros CEO Christine Barone saying, quote, "We're seeing really incredible performance out of those younger cohorts." So, yes, to sum it up, confusing. There's so much going on, guys, and we've been trying to track it all, but there's no one common denominator here.
Maybe just have a good product and a good brand, and then that'll help during this time where it gets a little choosy. Thank you, Kate.